Good noon to everyone. This is Dr. D. Kutika, Department of Commerce with Capital Applications, Dr. S.N.S. Rajashmi College of Arts and Science. Today in our playlist, Why Stock Market, we have uploaded more number of videos to you. Today we are going to discuss about your important terms of your stock market regarding your stock market. Okay, so in your stock market you can find very difficult terms which will you'll not be able to understand. To have a clear picture, I am giving you the terms, important terms that you have to understand while trading in your stock market. Okay, so the first one is your Sensex. Sensex is nothing but the collection of top 30 listed companies in your BSE. BSE is your Bombay Stock Exchange, which was established in the year of 1875 in India. So by way of market capitalization, what are the top 30 stocks listed in your stock market, that is given as your Sensex. Next one is your SEBI. This is the regulatory body. SEBI is nothing but the Securities and Exchange Board of India, and it is a market regulator to oversee any fraudulent activities made by any parties, their investors, traders, brokers. So to regulate that, we have a board that is known as your SEBI. And next term is your DMAT. DMAT is nothing but is your dematerialization account. That is the form of your online portfolio that holds a customer shares and other securities. In a simplified form, when we understand, it is the electronic format of all the informations which the investors has to be held by the SEBI. Just like the KYC is held by the bankers, the SEBI will be having the demat account to trade in that particular shares and stocks of your stock market. Okay, and then next one is your stock index. Stock index is nothing but the stock market index, which is a statistical source that measures the financial market fluctuations inside the market. So you need an index to understand what is happening inside the stock market. For that purpose, the SEBI has given you this stock index. Okay, then next one is regarding your portfolio. As you all know, the portfolio is a combination of all your securities, stocks, etc. So here the portfolio is a wide range of the assets that owned by the investors. The portfolio, it can also be ranging from gold, stocks, funds, derivatives, and your property, cash equivalents, bonds, etc. And we have to understand the terms like your bull market and your bear market, which is named against the animals, because the bull market, it tends to generate more revenue, and that as the company economy grows, the consumers are more likely to spend in that particular bull market. But in the opposite, regarding your bear market, it is a slowdown in the economy, and the consumers likely to spend and lower the in turn and lower the GDP. GDP is, as you all know, the gross domestic product. And the next term is your Nifty 50. That is, Nifty 50 is nothing but the collection of your top 50 companies which is listed in your National Stock Exchange, that is your NSE. I'll give you an explanation about your BSE and NSE further. The next one is your stock market broker. That is, you all know, the broker is an investment advisor who executes the transactions such as the buying and selling stocks on behalf of their clients. Next is your bid price. The bid price is the highest price a buyer will pay to buy a specified number of the shares of the stock at a given time. That is known as your bid price. To the opposite, we know that the ask price is a stock market refers to the lowest price at which the seller will sell the stock. Here, in your bid price, they will buy the stock. In your ask price, they will be selling the stock. The next term is your initial public offer. In short, we say them as your IPO. That is nothing but the selling of the securities to the public in the primary market is known as your initial public offer. So the largest source of funds with long and or indefinite maturity for the company. The next one is your equity. Equity is that would be received by the shareholder if all the company's assets are liquidated and all the company's debts were paid off. Automatically the equity will be given to the shareholders. Next one is, you know, that is your dividend. The dividend is nothing but the company provides to the shareholders for the benefit for which they have invested in the shares. So it is the return. In short, we say that a return which is received by the shareholders for their investment in the shares. It can be issued in various forms like your cash payment, stocks, or any other form. Then, as I told you, I'll give you an explanation about your BSE and NSE. BSE is the largest and first securities exchange market in India, and it was established in the year of 1875 in Native Shares and Stock Brokers Association. And next, it is also the first stock exchange in India which provides an equities trading platform for the small and medium enterprises. Next one is your NSE. NSE is the first to implement the screen-based electronic trading in India, and it is the fourth largest stock exchange in the world in terms of your equity trading volume as per the World's Federation of the Exchange, that is WFE. The next term is regarding your call and put option. The call option gives the investors the right to purchase the underlying security, while the put option gives the investors the right to sell the shares of the underlying security. Both opinions let the investors profit from movements in the stock prices. So these are the terms which you have to understand in your stock market. Thank you for listening to my video. Kindly keep in touch for your further videos. Thank you.